Hey traders, so it's just a follow-up to the last video I did. I want to touch on bonds, the bond market, and then Forex. Alright, so 30s, um, this is what we got going on in 30s now. I may have to erase some of this crap. Alright, hide all drawing. Alright, this is a classic pullback in the model, and I'll show you this, and this happens on any time frame, and it happens over and over and over again. And it's something I discovered a long time ago. Just staring at 50,000 hours of charts, or maybe more. When you look at price movement, okay, you guys know I teach the TMS like this. This is the higher lows within the uptrend. Okay, this market moved sideways here. You can see the 30 went sideways. This is the 30, this blue line, right? So when you go into a sideways market, you're going to tend to get these lows and highs, equidistant lows and highs, but they're going to be further away from the 30 as that's in the middle. Okay, this is your sideways range trade. It's a big picture range trade, but that is what it is, right? It's within the context overall still a bullish uptrend that's been going on all year. But then once you move to a higher low and we made new highs here above this high, okay, that moves you back into a more momentous, a more bullish uptrend that has more momentum, that has greater angle and distance, right? The chart starts to rise more up and to the right at 2 o'clock. And then these higher lows will be at or near the 30. Okay, so there's your higher low, here's your next higher low. Now from here, the market started to do another range trade, okay? And it was just these lows were the lows that mattered. And once we cracked those lows, I didn't like the fact that we didn't hold the bands here, but we made a little bit of an effort to maybe hold this area, kind of like we did here. You dip below the bands, held below the bands. Alright, but this couldn't hold this week. So this is where we cut our long exposure. And now, when you get a break like this, when you break the higher lows, or you break the TMS, you tend to get a move back to the 200 or back to the pie line. Alright, so that's what's taking place now. You're getting a deeper correction within this overall long-term bull market. Okay, so I think from here, I played a small short, covered into the 200. You can buy the 200 here, small, and realize that you're probably a little bit early. But this is good location longer term. It's the right spot to buy. I actually think we can test a little lower, and we're going to test pi down here. I actually haven't looked at the yield chart in a while. I wonder what these, when the lows, we get back to these lows from April, May, and June. We'll see what the yield level is on 10s and 30s. But it's the same spot. I think this is the area that the bond market wants to test, is right here. Alright, so that's my call. If we look at the hourly, let me put my drawings back on here. Well, here's the 4-hour. You can just see this is a lot more action going on, but this is where we stopped when we broke. I just explained these higher lows that broke. And then I had circled this gray area as a spot for maybe the market to hold, but you wanted to cover into these lows for sure, and that's what we did today. So I'm only short a tiny piece now. Alright, still short a tiny piece. It was a pretty decent day on the piece I have. Alright, so from here, that's the game plan. I'm still thinking on the short side. And you can see the hourly. I could have played this a little bit more aggressive from the short side. I just like the long exposure because I've been so bearish the economy since last year. We've had the growth slowing call right. We've had the right positions on. We made a lot of money in the long bond this year. I didn't really want to abandon it just because the intermediate term started to roll over. But you could see that this pie line started to roll. So there was opportunities to get short before I was short down here. I stopped on my longs here once this broke. But there was opportunities. I mean, when I was buying here, I was making sure that I was getting out into the top of the range here, especially on this day. All right, it sold in 3 pieces on this day, but you can see it's all up here near pi. So this rally up here, this was a great spot to short. If it rallied even further, you could have got even more short there, and then you would have got rewarded for this entire move down. So there were some bears there that were a little bit more aggressive than I was, and that just depends on how you play it. I was playing the more longer term bull market, buying here, and then hoping that we broke out to a new trend upwards. You just didn't get it, so you just defacing the entire chart. But I think that makes sense to you guys. There was a little bit more of a faster short you could have played on bonds. And looking back, I kind of wish I had, but it is what it is. I mean, I gave up 10 grand from this move here to my stop. We made back 2 today. And then, like I said, last Friday, I mean, I was short high yield up in this area, longer term. And then when we broke Friday, I mean, I made 3 times the amount on what I had on my treasury position, just because I knew that this thing was vulnerable to rolling over. It hadn't made new highs, so I kept the long bond position smaller and stayed more short high yield. All right, so that's the 30-year. Now, what I want to explain too is how I'm playing 5s against it. So the 5-year was in a nice downtrend. This is actually, you could draw a 1 standard deviation trend here, and you would capture pretty much all of these highs and lows. All right, but now I switched, because I'm short 30s now, I'm okay with buying some 5s against it. And the way I played that was what did I do? Oh, when I was long, okay, so we were long 30s, right? At this point in time, at the end of August, I was long 30s. So I knew that when we got a rally up here, especially 5s into pi, I took some shorts and I sold 5s short against my 30-year long. And when you sell 5s and you buy longer out the curve, that's putting you into a flattener, right? And then I took profit on my 5s down here, okay? And then I switched. As soon as I switched my 30-year position to short, I switched my 5-year position to long. So I bought 6 contracts against my short position, all right? And now that put me in a steepener, which was in the direction of the trend that the yield curve has been going. So this trade is going to work in my favor. 5s in the front end have been selling off less than the long end. So if you want to buy something, you want to be, if the curve's steepening, you want to be buying the front end or the belly more than likely. Right? So I bought 5s here a few days ago, and then I got a rally up here, and we sold today up into this area. And now I actually put it back on. Right? So this didn't save on the chart because I think I had a different panel up. But anyway, I have to draw that in so we can remember. But alright, so I'm playing a small 5-year position against, that's the Forex chart, sorry about that. So I'm playing the 5s long, okay? And then when we get these rallies, what I'll do is I'll lighten up. So I sold 3 here, I was long 6 from here, sold 3, bought 3 more, so I'm back long 6. So if we get this rally, guess what? I'm going to sell 3 out. And so I'm going to work this position along with the short side of the 30-year, and that's how I leg in and out of the yield curve. And you can kind of make money on both sides. You can hedge your position that you're more heavily weighted on, which will be the 30-year. So anyway, as I hope to show you guys how we leg in and out of the curve and do some things in treasuries and fixed income world. That's the way that we used to trade the yield curve. Alright, so that's Treasuries. Why don't I wrap this up, and then I'll do another video on FX because it's probably going to be another lengthy one. Alright, so anybody that's new, I'm going to encourage you to visit the site. We have a live trading room where we're doing this stuff all day long. Bonds, futures, Forex, guys day trading, swing trades. We have long-term positions. I have two services. I have an active trader membership. That's it's $149.95, $150 a month. All right, and that gives you all my trade alerts, both swing trade, day trade, anything that I'm trading, any alerts that I have, any analysis I do, all day, every day. It's $150. It's practically free. All right, and then I have a longer term service we call Preferred Portfolio, and that's where we look at positions like shorting XRT. We're shorting the retail sector, covering the retail sector. We've been short financials. These are the longer term trades. When we get bullish things like Apple, all that stuff's going to be on my longer term Preferred Portfolio service, it's kind of geared for anybody that's not trying to make a living at this, or just has a 401k or an IRA that they're investing for the long term. These are my core long-term positions and how I'm playing it. So anyway, guys, visit the site if you want to know more info on that type of stuff. JenkinsRM.com, and then I'll finish up one more video for you.